What's going on, guys? Ryan here with Obe TA to talk to you treasure hunters about Fibonacci and how you can use it in your trading strategies. All right, I get a lot of questions about this in my Discord, link down below. Go join that, by the way, about what is Fibonacci and how do I use it. Well, you ask, you shall receive. So here's a quick video that you can reference anytime you want to strengthen your trading toolkit, study and learn how to use Fibonacci for yourself. So Fibonacci itself, it doesn't really matter how it's calculated, what it is. All you really need to know is how to plot it and how to look for confluence with certain levels. So confluence is going to be when multiple factors align. And I can show you real quick what I mean by that. So your Fibonacci retracement tool is going to be right down here. Okay, it's going to say Fib retracement. You'll see it'll have like 4 lines with a couple little circles on each side. You go ahead, you click the Fib retracement. It always goes left to right. All right, so it always goes left to right. It always goes either wick to wick or body to body. Okay, so you can't do like a body, and the body is going to be any colored part of the candle. The wicks are these long extensions, these white parts. That's called the wick. The actual body of the candle, which is just any part that's not the wick, is called body. So what you would do if we're going to go wick to wick here, you go from a swing high to a swing low. All right, so go to the highest wick from the swing high and go to the lowest low from the swing low. Okay, so that's how you would plot it just off the bat there. Okay, you do it from a high to a low or a low to a high, left to right. All right, now I'm going to go through real quick what the retracements are. Okay, so the 236 and the 382. The 0.236 converts into a percentage. So 0.236 equals 23.6%, right? 38.2%. 50%, 61.8%, 78.6%, 88.6%, and then the number 1 or 0 is just 100% retracement. So what that means is that when you have your high to low here, right, on the way back up, the swing back up, and what constitutes a swing is once it hits at least the 236, all right, it has to at least hit the 236. Then you can consider it a swing low and start to look at these levels coming up for potential areas of reversal. Okay, you would expect price to reverse to the downside at these levels. Okay, now this comes back to the confluence that I mentioned in the beginning. Confluence is when multiple factors align. So what you can see down here, this blue squiggly line is what's called the 50-day moving average, which is something that is used by technical analysts in technical analysis as an area of potential resistance or support. Okay, so what you have here is you have the 382, which is a shallow retrace, which by itself doesn't really mean too much. And that's an important point with Fibonacci here and with any other tool that you use. You don't really use them by themselves. You always want to use them in confluence with other indicators to strengthen your argument. Okay, imagine you're going to court. Imagine you're a lawyer presenting your argument as to whether it's bullish or bearish. You want to have more than just one argument to try and sway the opinion, right, or to try and build a strong argument. So what you have here as far as confluence is you have the 50-day moving average lining up with the 382 retracement. So in this case, this 382 is no ordinary 382. It is beefed up and should be regarded as an even more likely area of resistance than as if it didn't have that 50-day moving average there, for example, right? Because now you have two factors lining up to think about as regarding it as resistance. As you can see right now, it is in fact regarding it as resistance. It wicked up, touched, and then is now selling down. Okay, so the levels here, let me go ahead and move this up, and while I'm moving it, let me touch on it. The 1618 is what is called the golden mean ratio. Okay, now that's just, again, another Fibonacci term, but the 1618 is important just because it is essentially a number that is observed occurring naturally in nature. So right up here, you can see it's kind of interesting, but Fibonacci sequences occur in nature varying from leaf arrangement in plants to the pattern of the florets of a flower, the bracts of a pine cone, the scales of a pineapple. Fibonacci numbers are therefore applicable to the growth of every living thing, including a single cell, a grain of wheat, a hive of bees, and even all of mankind, and even, you guessed it, the charts. All right? So, coming back down in here, 236, 382, the shallow retrace areas, we touched a little bit on Confluence. I want to talk about the 50% retrace and the 618. The 50% retrace, the 0.50, that's this gold line here, okay, is not a Fibonacci number. That is actually part of Dow theory, coined by a man named Charles Dow. You may have heard of the Dow Jones, named after him, right? So his theory was just that assets, after they've made a run down, like a major run down, will often, after putting in a low, retrace 50% of their value before continuing the trend down. Okay, that was Dow theory. The reason that we use that in this is the 50% retrace and the 618, which is the reciprocal of the 1618, okay? So just keep that in mind, makes up what is called the golden zone, okay? So instead of just the lines, you now have an entire zone where if price gets up into it, that is an area to watch out for as a reversal area. And if it was coming down, it'd be the same kind of thing, right? If we Fibonacci the other way, and I'll show you that in a sec here. But it's called the golden zone, which just means it's an area where we see reactions occur frequently. Put that in Confluence with historical, peaks of resistance, stuff like that, and it just beefs up your argument. But it gives you a zone as opposed to just a line to look at to make a potential entry, right? In this case, you'd be maybe looking to put in a short here. All right. So those are what are considered medium retracements, okay? And then the 786 and the 886 up here are what are called deep retracements. That's where harmonics start to come into play. I have a whole nother video on harmonics if you want to go check that out in the channel. But for time's sake here, those are just additional Fibonacci levels to look out for. And then, of course, you have the 113, 1272, 1414, up to the 1618. Again, those more come into play with harmonics, but if they have confluence with other variables, let's say the 200-day moving average, this red line was up here, right? Like the 1272. Once price started making its way up, you could expect that to be a major point of potential resistance. Okay? So in that case, you wouldn't want to buy it right here. You would wait for it to either break above and maybe come back and test, or reject and then look to get it maybe at a support. All right. So that is pretty much what there is with the levels as far as the retracements. Okay. Now, again, always left to right. Always, if you're doing bodies, body to body, wick to wick, or wick to wick. If there is no wick, right, and it's like there's only the bottom, or the bottom that's put in is just a body, right? You don't go body like this up to the top of the wick. You pull it down and do it to the body, all right? You can't cheat that way. It's just a rule of thumb. All right, so next up, I guess, let me show you again. You can go top to bottom, or you can go bottom, right, like this, to the top. All right, so let's say it's moving up. Let's say price is coming down. It's sold off, right? It puts in a bottom, okay? It starts moving up, 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 and then it starts to put in a top. Once it hits this 236 here, we know that there's, it's a valid top, and we can place that Fibonacci there. When this is moving around, you can just leave this here. As it's coming down and it hits these levels, the 382, right, the 50% retrace, now it's in, the golden zone, the 618. All right, these are all areas to be watching for and to be looking left at potential areas of support. All right, in this case, if we look left over here, let's just say from August 5th, this price at 37,513. We can see it was a support back here, right? So we go ahead and plot that. The 618, you can see, is pretty close to that support. So we know the 618 is a strong support. We know that horizontal support is also in play. So what I do in this case is I would go ahead and I would create a zone, right, between the two. The 618 and that horizontal support is now my zone of support. And that's where I look for an asset to start getting some kind of support, okay? And as we can see, from this low to high, it's not always going to be perfect, but you can see it did start getting some support. It did on this day, February 24th, it was a wild day, wicked all the way down to the 886, at which case, again, that's where, I'll just show you real quick, harmonics, which would be something like this, right? A harmonic came into play down at the 886. It's just extensions of Fibonacci, but we're not going to talk too much about that before reversing and going back towards the upside. But, you know, you can see here that these levels, that being the support historically, lined up with a Fibonacci, and it got some support before rallying and going back towards the upside. All right, so that's just one example of how you can use Fibonacci, again, in confluence with other tools to beef up your argument when you're trying to make a trade. So, guys, I hope that was helpful. If you have any additional questions, join the Discord, shoot them off in there. You know, it's all free. I just hang out in there, try to help you guys, and try to also learn from you guys. You know, if you've got a better method of doing things, I'd be happy to hear it. Leave a comment, like and subscribe if this was helpful to you. But yeah, other than that, I'll see you guys in the Discord. And as always, keep it technical. All right, players.